I'm Raina here from Sage Investors, and I'm here to do a quick mind map analysis of German ETFs, German Exchange Traded Funds. This video can also be heard in podcast form, and you can check it out on my website, sageinvestors.ca, or you can download, subscribe to it through Apple Podcasts. So I was going down a list I saw the other day of the top performing and the top underperforming asset classes so far this year. And near the bottom of the list were the German equities, German stock markets have not been doing well this year. They've been down almost double digits, near 15%. And so given that we know that the German economy, the German marketplace is one of the powerhouses in the world, especially in Europe, and it's one of the key drivers of economic growth in Europe, I thought the fact that the German stocks are down right now, I thought maybe this is a good opportunity to jump in and get a little bit more exposure to that market. Now, normally I usually would analyze, by individual stocks, but right now I just don't have the time to go into that depth of analysis. So I thought the best way for me to get exposure to the German stock market is to buy an ETF, buy a basket of German stocks, and ETFs are a great and cheap way to do it. So what I decided to do was pick out a bunch of German ETFs, German exchange traded funds that invest in German equities, and take a look at each of them and compare them according to a set of basic criteria. And this is the criteria that I'm using here I utilize it in the everyday investing, not the everyday investing course, the how to invest in ETFs course that I offer both in person and online. So what essentially what I'm going to do is walk through 4 different German focused ETFs and evaluate them according to a set of criteria. We'll look at them individually, and then we'll look at them as a group and see if there is anything here, if one stands out as something that I would be interested in investing in for my portfolio. So let's jump in. Let's take a look at the first stock. First ETF that I came across that I identified was the Horizons product called, its ticker symbol DAX, the DAX. And what it does is it's essentially a portfolio that invests or tries to track the performance of the DAX 30, which is essentially, it's almost the equivalent to like the Dow Jones Industrials in the US. It's the 30 largest German stocks or 30 largest German companies out there, and it's a large cap oriented portfolio. So when you look at it from an active or passive, is the ETF actively or passively being managed? The fact that it's trying to just mirror or copy the performance of a broad-based index would lead me to think that it's a passive oriented ETF. The costs associated with owning it, or the management expense ratio for it, the posted rate that I found was 0.45%. But apparently Horizons has got a bit of a deal going on right now where they're actually have lowered the price to 20.2% until they were saying July of 2019. So right now it's actually selling for 0.2%. The costs are 0.2%. Normally it's 0.45%. So it's a bit of a deal right now. Next thing that I look at with respect to this ETF is the liquidity. What kind of volume of trading occurs for this ETF? And so right now the DAX ETF trades on average about 2,600 shares a day, which is not a lot, and that's something as an investor would be a little bit concerned with, because if it doesn't trade a lot, then chances are any of the price swings on this ETF are going to be a lot more extreme, and there's a potential that you could get caught holding it if it wouldn't take much for the stock price to really violently change from that side of it. We took a look at the fact of the matter is it's tracking the DAX index. The next thing we want to look at also is the makeup of the portfolio. How big is the portfolio, and what's the concentration of assets? How is the makeup or the concentration of the assets within the portfolio? So the DAX, the Horizons product has about $17 million invested into it. It consists of 30 stocks, which is exactly the same. And it's the same 30 stocks that make up the DAX index. And it's interesting that the top, if you looked at the top 10 holdings, represent about 63% of the total portfolio. So it's a very concentrated portfolio. It makes sense. There's only 30 stocks in it, so it's a very concentrated portfolio, and it skews heavily towards the largest German companies out there. The final variable we want to look at for the ETF is the tracking error, the amount of return that. The difference essentially between the return the ETF generates and the return of the index that it is trying to track or to mirror. And so for the DAX ETF, the tracking error came in at 91%. So basically the variance between the return of the DAX ETF and the overall DAX index is about 9%. So it's generating about 91% of what the total return that the DAX is, which is a little bit low, We want, ultimately as investors, we want to buy stocks or ETFs that are tracking as closely as possible to the index that they're trying to model, or the index that they're trying to perform against. And so if your ETF is not performing close to the same level as what the index that you're trying to track is, then you're leaving money on the table, and there's a lot of wastage, a lot of leakage in that portfolio, and it would kind of trigger in your mind that, you know what, this portfolio, this ETF may not be a very efficient and a very productive portfolio, and I may be losing money just simply by holding it, and it doesn't even become about tracking the performance of the market you're trying to get exposure to. So that's the DAX, that's the Horizons product. The next one we're going to take a look at here is the iShares product, which is the iShares German ETF, ticker symbol EWG. Now, the same thing in terms of how it's structured in the mandate of the ETF. Essentially, the goal is to mirror the performance of the MSCI Germany index, which usually consists of more mid to large cap companies. It's, from that perspective, it is a passively managed portfolio. In terms of costs, commissions associated with it, the EWG charges 0.49%. Which is, again, a little bit higher than the DAX product. In terms of liquidity, it's a very, very liquid ETF. It trades on average 4 million shares a day. So there's a lot of liquidity behind it, and so chances are the pricing of the ETF, if you were to go and buy it or sell it, you're going to get a pretty good, fair and reasonable price on the ETF. You won't get the violent swings that you might get with the DAX. The portfolio itself consists of 67 stocks, and if you were to look at the top 10 represent about 53% of the portfolio. So it's a little bit more diverse in a sense, or it has a little bit more diversification than the DAX product in that sense. And in terms of tracking error, the tracking error that I calculated for this ETF came in at about 94%. So it was about a 5% sort of leakage in there. So it's a little bit better than the DAX product from that side of it. So that's the EWG. It's a very popular ETF. It's a very large ETF from that side of the equation. Next one we'll take a look at here quickly is another iShares product called its ticker symbol EWGS, and the difference between this one and the EWG is, besides it has an S at the end of the ticker symbol, is the focus on this ETF is to it tracks the performance of the MSCI Germany small caps. So it invests more in smaller German companies, smaller Germans, lower capitalized German stocks. So so it's a little bit has a little bit more of a different kind of approach, or the portfolio makeup is a little bit more focused towards smaller German businesses. Again, it's a passively managed portfolio. In terms of costs, they charge about 0.59%. In terms of liquidity, it on average trades about 7,200 shares a day. So slightly more than the Horizons product, and but much less than the EWG ETF. If you were to look at the breakup of the portfolio, it consists of about 121 stocks. And the top 10, it's got 47 million in assets. And the top 10 make up approximately 25% of the portfolio. So it's a much more diverse portfolio of stocks compared to the EWG. When we look at the tracking error here is really pretty good. It's about 98.7%. So it really tracks closely with the MSCI Germany Small Cap Index. So again, so that's the difference. The EWGS is really a small cap German ETF, and the EWG invests in more mid to large size German companies. Now, finally, the last one we're going to take a look at here is, again, another iShares product. iShares seems to be really kind of all in on German stock market, German stocks. So the other product that they have is called, and its ticker symbol is HEWG, and essentially it's exactly the same makeup as the EWG. Now, what's the difference? There's one really big difference with it, and that difference is, I'll just write it down here. The big difference here is it is a hedged ETF. And it's passively managed, as essentially it owns the EWG, but the difference is it hedges the currency exposure with US dollar and euro. So one of the things it does is that it uses derivative type products to offset any reduction or any volatility that might occur between the US dollar and the euro. And by doing that, essentially the return that you're going to generate off it is really going to be a much more a return that's going to be much more aligned with what the return is of the German equity market. Now, in terms of cost, the one thing that's, again, a difference, because it's undertaking this extra component to manage this portfolio, there's a cost to it. And so the HEWG, the hedge version of EWG, charges a commission of 1.01%, which is literally almost double the EWG. So if you're interested in hedging, and if you're somebody who's worried about currencies and erosion of your value of your portfolio because of currency risk and things like that, you could pay a little bit extra, and the HEWG will take away that risk for you, and you can get a much more aligned return with the broad-based German index. But you have to pay extra for that privilege. In terms of liquidity, it trades about 194,000 shares a day. As I said, it's essentially exactly the same breakdown as the EWG portfolio. it essentially what it does is it holds EWG, and then it has a whole bunch of derivative products around it to manage the currency exposure around it. And finally, in terms of tracking error, does the answer is the exposure having a hedged version of EWG? Does it track better than the EWG version, the original version? In terms of tracking error, it came in around 95%, so it's almost the same as the EWG. So there you go. Those are 4 different ETFs that I was looking at. Tried to compare it across a set of consistent criteria. So at the end of the day, you gotta I took a look at this. I put this together, and then I had to try to figure out, okay, which one, if any, jumps out at me and would be something that I would want to pursue in my portfolio. So let's do what I did was I just basically did a comparative then kind of analysis. So if we were to look at all these 4 ETFs, they're all essentially they're passively managed. They're trying to track some kind of broad-based index, so they're kind of good in that sense. The next thing I looked at would look at as costs, like which one are cheaper in that sense. And so right now, if you're looking purely on a cost basis, the EWG is looking like it's the cheapest one out there. The DAX, which charges about 0.45, is almost similar, but right now also it's got a bit of a deal right now with the until next year, where you can buy it actually at a lower with a lower cost component to it. So that looks kind of appealing from that sense. From a liquidity perspective, clearly the IWG, trading at 4 million shares a day, is much more liquid. It's far and away the most liquid ETF of the bunch. As I said, they both have a very passively oriented. They have a very passively oriented, but different styles in the sense that they have different exposures to different types of German companies. So the DAX has a much more larger German companies. Same with the EWG and the HEWG. The EWGS has a more focus to smaller caps. So it really comes down to your preference of what kind of companies you want to invest in. And so that kind of is really almost a personal preference. When I looked at the portfolios, when we look at the portfolios, the EWGS is probably the most diversified portfolio, in that the top 10 only represents about 25%, while the other ones are much more heavily concentrated from that side of it. And if we were looking at it in terms of tracking error, the EWGS again seems to have a lot closer to the portfolio, to the index that they're trying to map themselves to. So when I looked at these, what jumped out at me when I looked at them, I thought, when I looked at the horizons, I like the fact that it's trying to track a very broad-based index, but I think what turned me off from it is the fact that it's not a very liquid ETF, and the fact that it's really highly concentrated from that side of it, and the fact that it had a pretty low tracking error. So from that side of it, I didn't think the Horizons one was a way to go. I looked at the EWG, and the fact that it's got a very passively oriented portfolio, high liquidity. It's still a bit concentrated, but a lot less. But it's concentrated into essentially the more blue chip kind of companies, which is kind of really what I wanted to look for. I really wanted to just get exposure to high blue chip German stocks. It's got a higher tracking error, so from that side of it, I thought this. I thought the EWG would be a little bit more appealing. And then the question is, well, then I looked also at the small cap version, the EWGS, and while I thought it would be a little bit more, I thought maybe this one from a risk perspective might have been a little bit more risk oriented, because now you're dealing with smaller cap, smaller businesses, and so there might be more volatility in terms of the share price of the ETF, of the portfolio, and the fact that also it really doesn't trade that much, only 7,200 shares. So that kind of turned me off, and the cost also was a little bit higher compared to the other ones. So from that side of it, I thought might be a little bit too much for my personal risk tolerance. So I kind of threw that one out too. And so essentially what it came down to was I like the EWG, but the question is, did I want to own the unhedged version, the EWG unhedged version, or did I want to own a hedged version? And so really what it comes down to is, you know, it's really how much can I sleep? How well do I want to sleep at night? Am I really worried about the whole currency exposure side of it? And if I am, then I probably, you know, going down this road might be a better way to go. At the end of the day, I decided, at the end it went, you know, because there's different schools of thought whether to, you know, hedge your currency exposure. And some people say over the long term, if you're going to hold the asset for a long period of time, essentially the currency issues kind of wash themselves out. At the end of the day, I think it was about having more exposure. I mean, having, you know, buying cheap, broad-based, a cheap broad-based ETF that would give me a really broad-based exposure to the broad German stock market and essentially the broader German economy. And from that perspective, I thought the EWG gave me all these elements, and I was my risk tolerance is in a way I was a bit more comfortable dealing with the currency risk, and I felt that the currency risk kind of would manage itself on its own. I didn't think I needed to do any more additional work, and I didn't really need to pay extra for that kind of function. So at the end of it, after looking at all these four ETFs, look at them according to a set of criteria, I ultimately decided to buy some shares or open up a position in the EWG, the iShares EWG German ETF. So that's my analysis of German exchange traded funds. If you're interested, you can check out some of my other videos, mind map videos, and podcasts of different companies and ETFs that I've analyzed for my own personal investment decisions. You can find them on my website, sageinvestors.ca. As I said, you can listen to my podcast, Stock Talk, which you can download from my website, or you can download from Apple Podcasts. So this has been another mind map analysis video podcast. My name is Amin Reina of Sage Investors, and thanks for listening in. Thanks for watching in. We'll see you again another time. Cheers.